This is part of the reason that metals like silver underperform, even despite strong fundamentals. So, assuming that manipulation really does exist, and I think you believe it does, the Western central banks have done a great job at holding down the price, and I have reasons why I believe they are. We won't get into that. People following me enough know exactly why I believe the metals, both silver and gold, for different reasons, have been suppressed. But let's just give as a given.
By junior silver miners, that's the SILJ, representing a lot of junior silver miners, up 3.77%. SILV is the Global X Silver Miners Trust, that's up 5.29% on the day. In Swiss francs that was, sorry, let's look at the, is that today? I think that must be today. Yeah, that would be today's price in Switzerland, up 5.29%. But in the closed market on Friday, it was up 4.82%. Let's go back there. Yeah, so it was playing in Switzerland. They're playing catch up with Friday's close.
I actually respect you more for having an open mind. You're someone who's been buying Bitcoin for a long time, done very well in it, but you understand it doesn't have to be one or the other. That doesn't have to be mutual exclusivity. And this is why one of the reasons that I'm so thrilled that Michelle McCory is here with us now, because she understands that. And in fact, she'll be emceeing a Bitcoin conference in Asia next month. And so she understands Bitcoin, she understands precious metals, and I think the two communities largely see the world similar. They go into the door for the same reason. One goes this way, one goes that way, looking one for profit, one for preservation. But not only do I think our portfolios are stronger with a sampling and understanding of both, but so too is our understanding of the world and of monetary affairs. So I think your point is not only well articulated, but I think it's spot on. Shift gears just a little bit and talk about signals and stress. We've seen a massive spike in gold and silver deliveries into COMEX vaults, and we've become a net importer of gold. Vince Lancy, someone I respect an awful lot, came out recently and said up to 85% of the gold being delivered around the world is not being reported to the IMF, and he might be right. In fact, I'm sure he is right to a degree. I don't know if it's 85% or more or less, but the point that he makes is certainly not lost on me. Much of that metal is actually being offloaded from the exchanges. This is a big difference, not just delivered into the eligible category on COMEX, but actually leaving the vaults. And this is something that we've never really seen before. At the same time, these same central banks are holding gold and demand from places like you said, Asia, India, Russia, Saudi Arabia with their big purchase of SLV the other day. This is all rising sharply. To you, Florian, do these delivery trends signal something about the stress in the system or something deeper in terms of gold and silver perhaps being integrated a little bit more into the monetary fabric? What do you see when you see all of these deliveries? And I would just like to highlight one thing and say, during the majority of my career, which goes back to 1989, 1990, less than 1% of contracts stood for delivery. And when I was looking at the first 3 days of the August contract on COMEX, just the first 3 days, 20,165 or something like that, contracts posted. Now, normally those contracts would either roll over, cash settle, and maybe 1% would stand for delivery. Of those 20,165 contracts, over 2 million ounces of gold, 100% of them stood for delivery, 100%. Now we're over 30,000, I think, for the month, and I don't have the rest of the numbers. But to these deliveries, and the fact that some of it, a lot of it, is actually leaving the exchange, same thing we see happening in the LBMA.
In recent months, an unprecedented surge in gold and silver deliveries has rippled across global exchanges. COMEX, historically dominated by cash settlements, is suddenly seeing entire contracts stand for physical metal. More surprising, much of that metal is not staying in official vaults, it's leaving entirely. Analysts like Vince Lancy suggest that the majority of global gold flows never reach official reporting channels, hinting at quiet accumulation by powerful players. This raises serious questions. Are nations and institutions preparing for deeper systemic stress And could this mark the beginning of a shift where physical assets regain a central role in finance?
David Bateman, he's a billionaire, and he's shown on Twitter, on his Twitter page or his X page, the warehouse full of silver that he took delivery of. Again, removing counterparty risk. And I want people to know that we have 9 vaults around North America, all with Brinks. One of them is a COMEX facility, just one of them, and that's JFK Brinks. And I have a client with over 1 million ounces of 1,000-ounce bars at Brinks JFK. She wanted to store it at Brinks Salt Lake City. And my Royal Canadian Mint distributor, who has them stored at Brinks JFK in the COMEX ecosystem, they're eligible bars, said, no, you don't want to do that. She doesn't want to do it. Well, why? Because if they move to Salt Lake City, then they're no longer in the COMEX ecosystem. Now think of David Bateman's bars in his own warehouse. I said, but that doesn't make sense to me. I said, if they're in the COMEX facility, in a Brinks facility, and they get loaded onto a Brinks truck and get moved to another Brinks facility in Salt Lake City, Utah, wouldn't it still be under the same chain of command? He says, no. Once it leaves COMEX, it's out, and it would have to be reassayed to come back in. So you look at a guy like David Bateman, who's got all of this silver. He doesn't plan on sending it back anytime soon. I think it's interesting when we see, and I use that in terms of all the metal that is being delivered off the exchange. Once it leaves, it is not easy to get it back, and most of it, now his may go back someday, but most of it, I would argue, is not going back, and that's something people should think about as they let this marinate a little bit. But anyways, he just came out and said that if just 10% of the gold investment globally, that demand shifted into silver, it would wipe out all the available annual mine supply. So again, thinking of COMEX delivery patterns or what we see on the LBMA, does this suggest that we are moving closer to that kind of either a structural crunch, a squeeze in silver, or are we seeing silver being remonetized as well, just not backing the system? The U.S. government just changed it, and they changed it from, I'll give the exact terminology, they changed it to a critical mineral, a classification that aligns with other critical minerals like copper and lithium. It's no longer just an industrial. Is something bigger going on with silver in your mind as well, is what I'm getting at?
Once metals exit official exchanges like COMEX or the LBMA, returning them is far from simple. Investors such as billionaire David Bateman have shown warehouses stacked with silver outside the system, effectively removing counterparty risk. The fact that vault operators distinguish between eligible and deliverable metal underlines the complexity. For those who take delivery, reintroducing bars to exchange circulation requires expensive reassaying, making it unlikely much of this metal will ever return. This silent exodus demonstrates rising distrust of paper promises and growing preference for direct ownership, an evolution that could redefine how global liquidity in precious metals is measured.
This is part of the reason that metals like silver underperform, even despite strong fundamentals. Assuming that manipulation really does exist, and I think you believe it does, the Western central banks have done a great job at holding down the price, and I have reasons why I believe they are. We won't get into that. People following me enough know exactly why I believe the metals, both silver and gold, for different reasons, have been suppressed. But let's just give as a given, do you see a point where these possible manipulations could backfire? For example, too many players stand for delivery on COMEX, or if central banks continue draining Western vaults, what could the consequences be? And I will paraphrase or highlight the LBMA, which, is a T+1 settlement. T is trade day, +1 is settlement. On the third day, the bar should be moving. Good portion of this year, they said, shortage of manpower and trucks at the Bank of England. It's now T+8 weeks.
By junior silver miners, that's the SILJ, representing a lot of junior silver miners, up 3.77%. SILV is the global ex-silver miners trust, that's up 5.29% on the day. In Swiss francs, that was, sorry, let's look at the, is that today? I think that must be today. Yeah, that would be today's price in Switzerland, up 5.29%. But in the closed market on Friday, it was up 4.82%. Let's go back there. Yeah, so it was playing in Switzerland. They're playing catch up with Friday's close.
Silver, long dismissed as merely industrial, is being reclassified by governments, including the United States, as a critical mineral, placing it alongside lithium and copper. This recognition reflects silver's dual nature, essential for green energy and technology, yet also a monetary asset. Analysts warn that if just 10% of global gold demand shifted into silver, available annual mine supply would be wiped out. Meanwhile, whispers of market suppression persist. If central banks and institutional players continue draining Western vaults, the delicate balance could snap, potentially pushing silver back toward a monetary role, with price shocks reverberating through the financial system.
And then we've got, that's in euros, same thing in euros. SRB, Serbi Gold, Sibania Stillwater, rising like a rocket. Silver Corp Metals, that one's up 4.08 today, or on Friday. Silver Corp Metals up 4.31 in different currency. Torex Gold Resources up 4.18% in Canadian dollars. That's the US Rand exchange rate, forget that. Wheaton Precious Metals up 3.28. West Red Lake Gold, forget that, up 5.43. That's a platinum thing. Kerr Mining, silver miner, very well known company, up 4.7%. Zhejiang Mining in Hong Kong, quote, but Chinese mining coming up 7.74%. Kingsgate Consolidated up 6.29% in Australian dollars. I guess that was this morning, playing catch up with Friday in New York. Northern Star Resources in Australia up 6.41%. Ora Banda Mining up 6.51%. The Australian shares are doing well here. That's palladium, platinum. Perseus Mining in Australia up 6.35%. Ramelius Resources, which was one I recommended about a month ago when I did a podcast about gold miners. That's gone up from 230 to 330, and it's since I recommended it's about up 4.73% today. And then we have West Gold Resources, which was another one I recommended at the beginning of August, about a month ago, in the video called Gold Miners. You've got a Gold Miners alert. That one's risen from 250 to 350, and today it's 371, up 7.85%. So as you can see, these gold miners are rocketing upwards. There's another one. What's that one?
Settlement delays in London's LBMA, where T+1 contracts stretch into weeks, reveal a system under stress. When promises of quick delivery slow down, it signals tight supply behind the scenes. Junior silver and gold miners have surged in response, with many equities posting double-digit gains in recent months. From Australia to Canada, miners are entering a bull cycle fueled by demand pressures and investor realization that paper markets cannot endlessly suppress physical shortages. As capital flows into these producers, it underscores a shift. The world may be entering a structural metals bull market where scarcity and trust drive valuations higher.
That one, ALTN. Oh, that's Altin Gold PLC, which is is it Kazakhstan they're mining in? Not sure. I think they're mining in Kazakhstan. They're a very cheap company on a price earnings ratio of 2 or 3 times, up 10.73% today in London, traded in London. So 846, I guess that's priced in pence, £8.46 a share. And as you can see, that's really rocketed up today. So there we are. We've got a real bull market going on. So the question is, how can you get involved? Well, first of all, if you look at the links, look below this video, you'll see I have 2 affiliate links. One is Gold Bullion Partners from London. So if you're in the UK or anywhere in Europe and you want to buy a lot of gold or a lot of silver, they're your best partner. And then the second link is ITM Trading. and they are in the USA, so that's for US investors. If you want to buy gold or silver, they'll be able to talk to you. In both cases, I put the phone number in the link below. There's a link and there's a description of the number for for Gold Bullion Partners and ITM Trading, so you can ring them up and discuss your situation, and if you decide to go ahead, they'll be able to sell you some gold or silver. The other way you can get involved, apart from buying physical, is to buy coins or small bars. You go to a coin shop. Now, you're going to pay a bigger premium if you're buying a small quantity. So if you go to a local coin dealer, you might pay as much as 50% premium for a small silver coin, like a 1 ounce coin, or maybe it'd be 20%, or it might be, if it's a bullion coin, might be very little at all. But it depends on your country. In some countries there's VAT, in England especially there's VAT to pay on silver, but not on gold.
For those looking to participate, options range from direct ownership of coins and bars to ETFs and mining stocks. Physical metal offers security but comes with premiums and in some countries taxes. ETFs provide liquidity but sacrifice custody. Mining shares carry leverage to rising prices, though with higher risk. The core idea is clear: gold and silver are regaining global importance. With Bitcoin also capturing trust as digital gold, the age of hard assets is evolving. For investors, the challenge is not whether to choose one or the other, but how to position wisely before supply shortages transform into systemic crises.
So almost everywhere in the world, gold is VAT free of sales tax, but silver in many places is subject to VAT or sales tax. So bear that in mind depending on where you live. Having said that, you might find it worth paying the sales tax and the premium to have something which is small and manageable, and which will probably hold its value in no time at all. Because if you look at what's happening to the silver price, it looks like it's going to carry on going up. And you know, a lot of people think that the $50, we're at $40 at the moment. A lot of people think that $50 is easy peasy from here. And you know, I'm hearing many people talk about silver going into the hundreds of dollars. I mean, I myself have done a video suggesting that under a particular set of circumstances, it could easily rise well above $100. And I won't go into the details. You watch the video if you want to find out what that would be. Another way to get into silver or gold is through exchange-traded funds. In most countries, you will find an exchange-traded fund registered in your own country, which holds physical gold or physical silver. The advantage of buying through an exchange-traded fund is it's easy to buy and sell. In other words, you've got a very narrow spread between bid and ask price. You can sell it at any time when the markets are open, and the money is credited to your account almost immediately. The disadvantage is they've got your gold, you don't. So you need that. If you want that gold, you need their permission, and you need to be dealing in a very large size to get it, which means unless you're a multi-millionaire demanding that sort of size of gold and physical physical silver, they probably won't cooperate to give you any. But you know, there are big institutions which put gold in and out of these ETFs on a day-by-day basis according to the supply and demand. Another way to invest in gold and silver is look at those mining stocks which we've been looking at just now. As you can see from the stocks we looked at, some of them are really going through the roof.